Hi, Fraser Jack here. Welcome back to our series on income protection insurance. This particular video, I just wanted to run through with you some of the optional extras that are available. When I say optional extras, I mean it's not included in the standard policy, but often for a little bit of an extra premium, you can get these added in. There are so many options available when it comes to the income protection policies. I'm only going to show you three here, but as you can see with these three, you're going to need to talk to your advisors about these options and how they work, and the additional options that I'm not going to cover, also how they respond with your policy and claim time. The first one I wanted to touch on was what we call a accident benefit option, or a short wait period for accident. So all of the income protection policies include accident, however they generally kick in after the waiting period starts. So if you're off work for, I don't know, 12 weeks with a broken arm, then you might, the first 4 weeks may be a stand down, and the following 8 weeks you'll get paid for. But with the short wait accident option, generally speaking, it is much shorter, really reduces the waiting period down to, say, in some cases 3 or 4 days. So what that means is if you are off work for 6 weeks, you would get paid for the whole 6 weeks, not just the 2 weeks after your waiting period. So a lot of people that work in tradies, or a lot of people that work with their hands or in those sort of areas, really love this option because it allows them to be, for a short-term claim, allows them to be paid for the entire length of the claim. Certainly a very popular option, and will add a few dollars to the premium. Increasing claims option. Now that is an option that we almost always like to put into the policies, and what that allows is if you're on a long-term claim and you're on a claim for a long period of time, every year the amount of money you're receiving, or your benefit amount, goes up with inflation. So as you can imagine, if you were on a claim and it was $5,000 a month, that $5,000 a month would erode with inflation over a long period of time. So it's good that that amount of money keeps up every year. The next option is what we call a superannuation contribution option, and you can imagine if you're on a long-term claim and you're earning 75% of your income, that you probably wouldn't have money to put into superannuation over the years. So this option, again, it's an additional premium, but it allows the insurance company to put a little bit of money away into your super every month. When they pay you the benefit, they also put some additional money into super. So it just means that you get to 65 or your policy stops paying you, or you retire, that you're actually going to have some money in your super. So it's a great option to have. As I said, there are many different options available. Please sit down and talk to your advisor about these options. Don't just skip over them. They're really important that you understand how they're going to respond for you, and you can choose to put them in or take them out. That's the beauty of it. Thanks for watching. Keep watching our series. We've got plenty more to go through.